Nvidia will report its second quarter earnings for the fiscal year 2026 after the U.S. markets close on the 20th August. This will be a bellwether for the AI industry and the broad market sentiment. So what do you need to know about Nvidia's upcoming earnings? I'm going to give you a quick preview in the next few minutes. The company's share price rallied 29% this year, driven by robust demand in its GPUs to run AI infrastructure, known as data centers. The share price is currently at $178 after hitting an all-time high of $184 earlier this month. Its market valuation topped $4 trillion in July, surpassing Microsoft to become the world's largest company. Nearly half of Nvidia's data center revenue is from hyperscalers, including Amazon Alphabet, Microsoft Meta, and Elon Musk's xAI. Tech giants indicated that they would increase spending on the AI infrastructure this year, which would result in hundreds of billions investment in the industry. Hence, ongoing heavy spending in AI will certainly boost Nvidia's growth outlook. The data center sales remain key metric of Nvidia's upcoming earnings report, which is forecasted to be $41 billion compared to $39 billion in the first fiscal quarter, and the figure will be another all-time high. Most analysts expect Nvidia to beat market expectations when it reports earnings next week. The focus will be on its most advanced AI chip, Blackwell sales. The company said it ships about 1,000 Grace Blackwell, which is GB200 products per week, and is on track to upgrade it into GB300. The overall sales is expected to be $45.8 billion, a 5% sequential increase and a 53% year-on-year growth. And earnings per share is forecasted to be $1 compared to 68 cents in the same quarter last year. However, Nvidia's revenue growth is actually slowing down from more than 100 to 200 year-on-year growth in the last 2 fiscal years. The risk factors will still be on U.S. government's AI chip export controls to China. In April, the Trump administration banned Nvidia's H20 chip sales to China, which were particularly designed for the country. CEO Jensen Huang said the China sales ban would have impacted about $8 billion sales on Nvidia. After a meeting with the U.S. president earlier this month, the U.S. resumed Nvidia's H20 sales to China. However, in exchange, the company needed to hand over 15% of Chinese sales to the government. That could mean $1.2 billion sales impact of the company. Currently, the broad market returned to risk on after the Fed poll indicated a rate cut last Friday. However, inflation risks remain as the investors are cautious about any tariff impacts on the global economy. Against this backdrop, Nvidia needs to strongly beat market expectations to satisfy investors' risk appetite. What are your thoughts on Nvidia's earnings? Please leave a comment below and subscribe me for future videos.